Okay, so we've went over some really important things and we've done some really, really good things, but this is going to be one of the most important videos um, in the training up until this point, because I know you guys are excited about the market reversal and all the different strategies that you know, but what is going to be extremely important is if you cannot put together risk management in all of this, then it is essentially not going to mean anything, because risk management is really going to be the glue of what allows you to survive the drawdown. Trading is about the probability game. So understanding that whenever you lose trades, your risk is what saves you. You have nothing you control in this market is essentially until you get to when you choose to buy and sell and how much risk you put on it. At that moment in time, when you choose to buy and you choose to sell, then you choose to put the risk on that you want, then at that moment, you now leave it up to the market. So you have no control. And in your mind, which your ego is there to essentially protect you, but your ego is going to give you two different things that go on inside of trading. You are going to have the greed aspect and you're going to have the fear aspect. It is in all of us. Some of us gravitate more towards fear and some of us gravitate more towards greed, but they happen to us simultaneously almost all the time. To give you an example, when you allow your ego to run you and to control you, you are trading, and while you're trading, let's just say you're like, oh, you know what? I don't want to trade proper risk management. Now, my thing is, I would always say trade less than 10% risk on your account. Diversify your income. You are an investor. So when you're in this market, no matter what you're trading in, whether it is currency pairs, whether it is cryptocurrency, whether it is stocks, okay, whether it's commodities or indices, whatever it is, you're an investor. And so my thing is never put more than 10% risk on, one single trade. So when you're doing this, if you do decide to do this, let's say you decide to risk more, and on this specific trade, you decide to risk 50% of your account, right? So you're leaning towards greed, right? And you're feeling really good because you've been on a streak and you're doing awesome, and you decide to risk 50% of your account. Well, you're like, I've won all these trades, I'm good, so I'm not even going to worry about this. But knowing that you've risked 50% of your trades, what happens if at some moment in time there's a fearful thought that creeps into your head that says, well, what happens if we lose all the profits that we just made? I don't want to do that. And all of a sudden you're like, And now all of a sudden you're thinking about that. And then if something else comes into play, well, if the market is going against you heavy, then what happens if you lose even more? And then all of a sudden you've allowed your ego to run you, and then you step into a greed mindset. Then all of a sudden fear now begins to run you, because what originally happened to you was the greed took over because you wanted to risk more, and then all of a sudden you become fearful. Therefore, you can't pay attention in class. You can't pay attention at work. You can't pay attention whenever you drive, because now you're at the mercy of the market. You can't control the market. So the market can choose to go up, 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 and up, and down, 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 and down, and you have no control over losing 50% of your account because you've already risked that much. And so you have to understand that risk management is what is going to keep you surviving in this market, guys. It's what's going to keep you thriving in this market. So it's extremely, extremely essential that you understand this. So what I'm going to do is I'm going to give you some real examples, okay? I'm going to use one of my trading accounts to be able to help you guys out so that you can see what it looks like in order to do this properly. Now, I don't use MetaTrader. I don't like MetaTrader. There's just many things I could tell you as to why I do not like it and how outdated it is. But I utilize a different broker. It's called Cervexis. There's not a real tag on here. It just says live. And then for demo, it just says demo. And then I'm going to show you guys how to utilize the risk to reward calculator properly. So we look at the amount of money that's in here. You guys can see I'm just going to use a rounded out amount of 523,000 even. And I'm going to show you guys how to utilize this and how to trade in risk management. Now, there is a app, so you can use MyFXBook is the app on your phone, and then the website is myfxbook.com. Now, what you can do is you can just Google Forex lot size calculator, and when you find MyFXbook, just click on it. It's going to take you right here. So what I want you to do is we have Euro USD pulled up over here on the Cervexes, right? And then what you're going to do is you're going to pull up the currency pair and you can type it in. Now, this does not trade, or this does not have crypto pairs on here or stock pairs, but it's okay because on my Cervexes, it actually shows you what you're going to lose and what you're going to win, unlike MetaTrader. And you'll see the way that this is utilized on here, and I think you guys are going to see, especially when I get to A-Book and B-Book brokers, of how great of a platform that we have inside of Cervexes and the access that we have this to. So you can come on here, you type in your currency pair. As you can see, it's Euro USD. The account currency is going to be USD, and then you're going to plug in your account size. So no matter what account size that you have, you're going to plug it in. You're going to put your risk to reward ratio in. Now, depending upon what you want to risk is your choice. I always say don't do more than 10%. So you can do a multitude of different things. You can do 0.5%, 1%, 1.5%, 5%, 3%, 4%. It doesn't really matter. It's basically what you're comfortable with in doing it, okay? And so on this specific one, let's just say we do 3, right? Now, this is important because stop loss and pips is going to tell you what number you have to put in here. And I'm going to show you how to get this number, okay? So I'm going to use a 3-touch rule example on gold because it's really easy to utilize this. So it's a very simple setup, and that was the thing that I had the little risk management thing on there. So what we're going to do is in this specific example, we're going to use a 3-touch rule. So 1, 2, and 3. Now, 3-touch rule says that where its position is at in the market, we are either going to buy or we're going to sell, which means we are either going to long it, that's a buy, and we're going to short it, that's a sell. So in this specific instance, we are going to long the market. Now, there's a tool over here on TradingView that shows you this, and it's the prediction and measurement tools, okay? So what you're going to do is you're going to click on that, and you're going to find long and short position. It's always at the top. So in this instance, we're going to use the long position because we are buying, okay? Now, what we're going to do is you're going to place the tool down. You're going to click on it. And you're going to notice it tells you target, stop, risk to reward. And you see how it says 1 there? And it shows this number here, and it shows this number here, and there's just percents and stuff. Now, for what I'm showing you, for how I'm showing you how to use this, the only numbers that you're worried about are the middle numbers, okay? So it's these middle numbers right here. What do I mean by the middle numbers? On the stop tool, you're worried about this number right here. On the target tool, you're worried about this number right here. On the risk to reward, you're worried about what the ratio says. So whatever this number is. Now, what you're going to want to do is you're going to want to get the red and the green to meet each other in the middle where you're going to take the trade. How do we do that? You pull it over to your 3rd touch in this specific instance, and you're going to pull it inside of that box there, okay? And what you're going to do is you're going to shrink this down, this little red box here. You're going to get it to where you can see it here. And you're going to shrink it to where it's a little bit below these wicks over here, okay? So when you do it, your cursor is going to give you these little dotted lines here. And you're going to follow this all the way up. So see how we're getting closer to that point there and see how we've gotten pretty close to the level right there, and see how when I let it go, do you see how there's the red there? And over here, the red is not inside of these wicks over here or inside these candlesticks. That's what we want. Now, in a real world, we may not buy it, that perfect on it, okay? But do you see how the red and the green, they meet each other in here? You see that? And see, the red represents your drawdown. It represents how your trade is going to be negative. The green represents your trade being positive. So what you want to do is you want to use these long and short positions to basically determine what your risk to reward stop loss is going to be, because it's going to give you your entry and your exit. Now, what you want to do is, you see how this thing has went from 1 to 5.2. It's like 5.28. See how it went to 5.28? That means that your trade is now, if you get in at this level and it goes to the tip of this green, then you're going to make 5.28 times the amount of what you risked here. What does that mean, though? That means that you risk 3%, right? So if the trade goes 5.28 times more than 3, then you're going to make however much that is. That's 15 plus percent of your trade. You're going to make more like 16 some percent of your trade if you do it right, because 5.28 times 3 is that. So how we break this down in very simplistic terms is, I always do a 3-to-1 risk to reward, meaning that I don't even need the market to go that much in my favor. I just need it to go 3. So when I pull this down, I'm going to get it to 3. Now, in this instance, I did it exactly perfect. It's literally okay if you do not make this thing perfect. I don't want you guys to think that it has to be perfect, okay? Like, I know some people wanted to have it perfect, but it's not always going to be perfect. Now, understanding that it says 3 there, that is extremely important, okay? Because I'm always, when we get into the next video, trade management, I'm going to break this down even more, but it says 3. Now, what I want you to understand is this. You must know where to place a stop loss, all right? Now, what I did is I showed you how to properly do this. Now, I'll go in more into depth on trade management video, but for now, I need you to look at this middle number. Now, I said the only numbers that you need to pay attention to on the long and short position tool are the middle numbers. That number there, that number there, and that number there. For instance, this is the stop. What you do, what the stop represents, is where your trade is automatically going to get taken out. So guess what you can do? You can rest easy. You can go to sleep knowing you only risk 3% of your total account. You can go to work. You can drive. You can spend time with your family. You can spend time with your loved ones. At any given time, you can go on vacation, and you can be in the ocean, and you can be in the mountains, wherever you are. And you can be okay knowing that when you place a stop in, and when you place it at 3% risk, you're only going to lose 3% of your account. That's it. That's called peace of mind. That's called not going crazy in the markets and having sleepless nights and being frustrated at your partner or being frustrated at your children and being upset because you're over here stressing about trades and things and all this stuff that does not matter in trading, because you can control this. You can't control if the market goes against you, but what you can control is where you buy, let's just basically say where you enter and the risk you put on your trade. That's what you can control. So look at this middle number here. See how it says 908.7? What I want you to then go and do is place 908 in there, okay? You can place that digit in there, and it's going to give you, actually, sorry, I want to do this the proper way. In gold, so for instance, this is gold right here. You're not going to put the full number in there. And this is also why I use this, because I'm glad that I remembered this. You're not going to use this full entire number. It says actually only going to use on a 3-digit number, like 3 digits. You're only going to use the first 2 numbers. On a 4-digit number on gold, you're going to use the first 3 digits. So this is not, so a 4-digit number, what do I mean by that? Here you go. That's a 4-digit number. You're going to use 1, 3, 4. In that specific instance, we were at a 3-digit number, and we were about right there. We'll just use 9, 1. We'll just use 9, 1. On a 3-digit number, you use the first 2. So, and we'll do other currency pairs. We don't have to. Your stop loss is not, let's just say 91, because this thing trades differently. Gold does. But you will use Euro USD as your base on gold. You could calculate it. Now, what it's going to tell you is exactly how much money you're going to lose. Now, when you see this, you are only going to lose $15,700, and that is 3% of that $523,000 on this specific account that I'm showing you. Okay, you're only going to see, this is going to tell you what you're going to lose, and the sizing is going to tell you the lot size that you place on. Now, I'm going to get to that in a second. Okay, so how this works is on this specific one, you just use the first 2 digits. That's what you use on this one. And I'm going to show you another example how to do this, okay? So that you guys aren't confused, but follow me here. Most important thing, now that you have this and you know exactly how much money you're going to lose and you're going to know the sizing, what you want to do is you want to go to your trading account. You want to go to your trading platform. Now, for instance, whenever you are doing it, let's just say we're going to go on gold here, because this one we need to want to create the order, okay? So we're going to place the pending order in here, or we can do the market order. No, let's do the pending order. We're going to do the pending order. And for instance, we're going to put in our volume is our price. So what do I mean by that? We go over here, our volume. That's our sizing. That's our sizing, 17.24 lots. I'm going to come here. So I'm going to come here. I'm going to put 17.24 in. Okay, that's what it's telling me that I'm going to put in. And then what's going to happen is I'm going to place my stop loss, right? I'm going to place my stop loss order in. Now, when we do this, we are going to place the order, right? We're going to put the order in, and the stop loss is going to come in. In this, it's going to be a little bit off because I'm placing, actually, no, I'll be able to do this right. I'll be able to do this right. Stop loss is going to be here. Where is our stop loss? It actually tells us the red, the gray, the green, the numbers here. Red, gray, green, remember that. Red is stop, gray is entry or price, right? Green is your take profit. So I'm going to come over to the Cervexes. I'm going to put the price in for gold. Now, I will do this so you guys can see it. The price of the order was 1682.4, okay? 168. See what was again? 1682.4. 1682.4. And then the stop loss, we go and we read the red, 1673. 1673, 1673. Okay, so when you look at this, you want to make sure that the numbers are about match up to where the price is. So do you see how right here, this is the pending order and this is the stop loss right there? Do you see how it looks almost the exact same on here? And you can see what about our loss was, about 16.7. And on this one, we're looking at about 16.2. But also, I have to take into consideration my spread comes into consideration there. And my commission comes into consideration also. So I'm about correct on that order. And you can see that it shows you this. It's not going to show you this in MetaTrader because MetaTrader is incompetent. But you can see your value right here. So that's what another reason I love to use Cervex is because it shows me these things and it helps me with these things. But you can see this right here. It shows you the value of your trade. It shows the volume that you put in. It shows the price that you put in, right? and then it shows you your stop loss. Now, if you want to put your take profit in, you're going to plug your take profit in, and you're going to utilize the number, the green number. So remember, gray is price, red is your stop loss, green is your take profit. So 1709 is what I'm going to put in. So you're going to see, I'm going to go 1709, and you're going to see that that's going to be my what I'm going to make. Now, I don't know why it puts this negative 45 here. That's not what we're going to lose. Maybe this thing likes to be incompetent sometimes. But that's basically 3 times the amount. If you do the math and you look at this, that's basically 3 times the amount of what you're going to make as to what you're risking on the account. So when you look back over here, you can see as long as the parameters match up, see how this looks here? See how that's the stop loss and that's the take profit? As long as it looks the same on your chart, you're doing it right. So anyone doing that, I don't know. I caught that a couple months ago. It was doing that, and I was like, "Huh? Why is it doing this?" But it would eventually be right whenever I just click the pending order in. So you can see now what this is. You get to decide your risk. So switching off of this, and let's just say we go to a Euro USD and we utilize what we have in here, right? So when we do this, let's say I want to risk 5%, and let's say I want to come over to Euro USD on my chart right here, and I want to look at the Euro USD that I have, and let's just say, I don't know, let's do a 3-touch rule again. This is basically right here, a 3-touch rule. Let's do the same thing, 1, 2, 3. Let's use, in this position, we're going to do a short position. So we're going to come over here, we're going to click the short position. We're going to click on this right here, and you see that it's now shifted. It's different now. So we're wanting this to say 3. We're looking for the middle numbers in here. That's what we're looking for. So we shift this number down, right? And so we look at this, but we have to look at previous price. What do I mean by that? Start it here and look at it off the first touch. You always go based off the first touch in trading because we don't know what happens over here. We have no idea. We only know the first touch and the second touch, and then we get to predict the next touches after that. So when you see that, does that, where that line and that red to green line, where it hits right here, does it hit the back of that red on that instance? No. Don't even pay attention to the numbers here. Just look at it with your eyes. Do the eye test. Shift this over right to here to the next point of entry and say, does it hit it? No, it does not. So if that number holds and it's far enough away, that means that it's valid for you to use it on the next one. So when you look at this here, do you see how right where the red and the green meet off that line, that this would actually uphold, and you see 3.07? So you can even shrink this down a little bit to where it tells you the right amount, and 2.96. That's cool. That's not a bad level to do on that. I don't want you guys to think that that's a bad. It's close enough. But now when you get that, you take that number right there, that 40.7, and you come over here and you want to risk 5% on your account. Now on this, you do not, on currency pairs, because gold is a commodity. It's different. On all currency pairs, you're going to use the exact number that they give you in the middle here. Okay, that's why I said I wanted to use gold first and then use this. It's no different. You don't have to have any special anything to use. You just use the numbers that they give you right here. So 40.7. So you're going to go here. You're going to type it in. You can type in 40.7, or you can round it to 41 pips. So I'm just going to round it. It's easier. Always keep this 1. Click calculate. Now, I am risking 5% of my account. This is now my risk here. Now, it would not matter, guys, if I put in this trade on gold and I did a 41 pip stop loss and I did 5%. I'm still going to lose 26,000. It is not going to change. 5% is 5%. Do you see what I mean when I say it doesn't matter what you trade on? It doesn't matter any of that stuff. 5% is 5%. What's going to happen is you're going to have to change your lot sizes, because since you're risking more, your lots are going to be a little bit different. So you're going to have to change your lot sizes. So now that you have this information and you know the stop loss and pips, you know the risk to reward ratio, you understand the sizing, you know what you're going to lose, come over to your platform. When you come over to your platform, go to the pair, click create order, click pending order, and plug it in. Remember, red, gray, green. Red is stop, gray is price, and green is take profit. So red, gray, green. So pending is 1.18, okay? 1.118,245. So pending is 118,245. Okay, so you can see the pending, it shows it right there. And then our stop loss is going to be 118,652. So stop loss 118,652. Okay, so you can see the stop loss. See, it does it properly. And then you put your take profit in, and that is 117,040. Okay, take profit 117,040. So see that. Now you got to put the volume in. Now what did it say? Like 68 lots or something. So 63.78. Okay. You have to put this in right. 63.78. Now, you look at this, and you look at the value, and you look at everything. You see the commission of the trade, $25,900. And what did it say over here? It says 26,150. That is about correct. You see you're going to make and lose about the same thing on there. You go and look at it and see, for whatever instance, it didn't make a negative value on this. Again, I don't know why it does that sometimes. It's weird. But as you see, that's about 3 times the amount of what you're going to lose to what you're going to make. You can see that. All you have to do, guys, is just click sell in here. That's it. You don't have to do anything else. You know you're going to lose how much of your account, that much, and you know it's a 5%. So when you guys are doing it, you're just putting in different numbers. So, for instance, if you have a $500 account and you want to risk 5% and a 41 pip stop loss, all you got to do is put 500 and click calculate, and it tells you the exact amount. $25 is going to be a 5% risk of 500. And these are your lots. It's just different. You just plug in something different. So there's not any kind of special anything that you got to like do or use or anything like that. It's just you have to understand what you're doing. And so when you're doing this, guys, all you're literally doing every single time is you're just trading the right way. You're using the right risk every single time. So this risk management section is what is going to help you tremendously in your trading journey, guys. It's just putting the proper risk on, is using this thing right here, and every time you want to do it, it doesn't matter. You just trade the right way. You just want to risk 2%, click calculate. Okay, $20, 0.05 lot. It doesn't matter. You just have to understand that trading is a probabilities game. And that 3-to-1 ratio that I show you is going to be essential. Now, in the next video, I'm going to break down trade management to you and how this actually is going to help you in your trading journey and what this is actually going to do. The trade management is going to be extremely helpful, and you're going to see exactly what needs to be done for you in this section. So hopefully this video was extremely helpful. And I look forward to seeing you guys on the next video.